Hello, Warriors. How's everyone doing today? Ren, how are you? Amira? Happy Hanukkah. Happy Hanukkah to everyone who celebrates it. Arena, Ingmar. Talking about candles. Hi, Kevin. Mike. Talking about candles, the NASDAQ Hanukkah candle was blown out yesterday. I have a question. Who was it that was here yesterday who said, Dale, NASDAQ looks pretty weak? And that's when we were still holding up here. Who was that? I know it's one of our regulars. Anyway, we're on the verge of a 2-week reversal at 12,840. We have some support here, but you take a look at this and you have to say this is a vulnerable market, right? Potential reversal week just by the candle. Right? Not an outside week. We'd have to cover some more ground. Also, I've been showing this descending triangle. Blake said he had the same line in silver. And I'd say that yesterday was a nice rejection of it. Right there near 25 bucks. And then was talking about gold being vulnerable, that if it took out 1850, there should be some decent acceleration. And there was. So tough to top those calls, okay? S&Ps are about 20 handles away from a 2-week reversal. They held up much better, but there's nothing bullish about this little formation here. In fact, if it bounces, and I think we're going to need a weaker dollar. I'm hoping for one more low in the dollar, okay, because that should provide shorting opportunities in precious metals and stock indexes. So we should get some type of pops. And this now the dollar index blue line is almost intersecting with this line here, but looks like it's going to come in just above 90, maybe about 90.20 or so. So it'd be another 70 here. So I know we have ECB today. They could make it happen, because even though we've been moving sideways in the euro.
Morning.
Morning. How are you?
Very well. We had ECB already.
Oh, okay.
Yeah, we just have the press conference coming up. That's it.
Okay.
Yes.
So anyway, I didn't know, but but you look at this and ECB or no ECB, this doesn't look like a top to me. Okay, it's sideways. All it's done is mark time and work off its overbought condition. Actually went all the way down here with hardly any price damage, maybe 150 pips. So I think the euro could lead it. I'm through trading euro pound for a little while. It's really wild, looked like we were going to fail, held here again, and all these tape bombs in the pound. But I think we have a formation here in the pound to pay attention to now, with this kind of flat bottom, guys, that we have here, the low that held last night. Let me move this conversation around a little bit. And I know, Blake, you probably have some stuff you want to get done. Just like a horizontal line, that's not where I wanted it. Anyway, you guys see this 3230. Let me just draw a trend line up here. To me, it looks like a descending triangle now. And we take out that 3230 level we're talking about. Okay, I give up. Anyway, looks like a descending triangle, and that's major support. that we have that 32.5. You could visualize it, and it's about a 400 point formation. So we'll see. I wouldn't short it now. I maybe on rallies, and I really don't want to short anything if we're going to get one more low in the Dixie, one more high in euro. So I guess I'll just let you guys take over since you're more aware of what's going on.
Well,
having-
the ECB just met, and
Yeah.
and they let me give you kind of a rundown here. They extended PEPP through March 2022. They had expected it to go through 2021. So they're basically the ECB is, providing more support to the economy than they expected. Extended LTRO by 12 months, and the
Market
rate
liked that.
stayed the same. What's that?
Yeah, the market liked it and bought euro.
The market did, yeah. The market
Yes.
did, and we saw, the euro rally. One of the dynamics that we've noticed with currencies as of late is that, the currencies tend to respond better if the central bank is more accommodative.
Yeah.
And so that's, what we've had with in near term is, central banks are more accommodative. You get their currencies, respective currencies will respond a little bit better. So we've seen that. Now there's been a really big, and I guess I should probably take over the screen here.
Okay. What about price of the euro? Are they concerned about no comments about recent?
We haven't
strength.
heard that yet, but we'll probably get that during the press conference. I'm assuming, which will be starting in about 20 minutes. So yeah, we might get a little heads up there on how they're feeling about where their currency is at currently. So yeah, that may be something too. So
they did say they're going to monitor the price of the currency.
What they did. They said they're going to monitor the euro. Now that's like hardly any type of real rhetoric, right, Stelios? I mean,
it's something, but it's nothing to be worried about yet.
Mm-hmm. Of course, they're going to say something as it spikes up a little bit, but I mean, as we're trading, at the best levels we have been in a couple of years, they're going to start to say something, but they're really not going to get super aggressive. I don't think, while we're probably below, let's say, a threshold of like 125, they probably aren't going to, be too adamant about, talking about the euro and the strength of the euro. So, now, one of the things that we should talk about is the cable. The cable's been all over the place today, huh? And yesterday they had a dinner, and the dinner, it's like, okay, you have this long dinner, and looks like nothing gets done. I was surprised the cable was just kind of sitting up there around the 133, 50 range last night, and then it sold off overnight. So when we got here, or when I got up this morning, the cable was selling off. Then some UK official says, after the dinner, chances of a deal getting done is, not very good. Then the pound starts to bounce because there's some comments from the UK that basically is saying that, there's that maybe a deal, they're going to do, Boris Johnson's going to do everything to get, to make sure something gets done. Anyway, and that came from Davies, I think. Needless to say, the cable's still all over the place. What we're finding is, dips below 133 are buying opportunities. Rallies close to 135 are probably selling opportunities until we get a definitive answer one way or the other with Brexit. I mean, that's really, it seems like that's what it's boiled down to, right? I mean, I myself, I was, buying a little cable, but not pound dollar. I was actually selling some euro sterling with DK, one of the other traders in our chat room, because if you read ForexAnalytix, I'm gonna go ahead and pull up our analysis here so you can kind of get a backdrop of what I was thinking. Last night, the 200 DMA and the broken trend line at the 89.70 level held, and as long as we are above this level, the risk is for higher. Okay, and this is the previous chart, right? We were testing the downtrend line, 200-day moving average, and then we get this bounce. So now that we're back up at the 618 retracement, I don't mind being on the short side near the 618 retracement, which is, 91.20. So, whoops, didn't want to do that. So here we are up around the 91.20 level, and it's like, okay, well, now that we're up here, if you really think a deal still is salvageable, which, I mean, arguably I think it is. So, there's a lot at stake to just walk away from a Brexit trade deal. I'm not at that point where it's like, okay, it's over. So I think that you could probably, as long as you know where your risk is, and I know if this is a range, I know where my risk reward is. My risk is above here, my reward is down here, and we're currently here. So it's a good risk reward to be on the short side. And that's the way I'm kind of viewing it right now. Did I want to buy the sterling? No, I should have, but I was trying to get the dollar out of the equation so much, because the dollar, it's difficult. You see the commodity currencies are still relatively strong, and then you got the European currencies that are trying to hold up. So it's instead of throwing the dollar dynamic into the mix, I thought the euro sterling would be a better trade. Anyway, let's talk about these charts and where we're at right now and kind of figure out what we're going to do here. So here's the euro, and I had a flag pattern drawn out, but this is, we have to tighten up these lines here. And so I think if you do that, you'll find that we're probably pretty close to resistance on the euro, which is going to come up around here at the 121.30. Now, I think that the euro can break out, personally. It looks like it can still break higher, but I think we have to be cognizant of the resistance up here. And just remember, you are going to get comments from Lagarde. So I'm going to mark up resistance, obviously, as the high, because that's going to be important. 121.80. And by the way, I had bids in at 120.50. I was trying to buy it on this 50% retracement, close to this red trend line you can see here. It just, obviously I didn't get triggered. So resistance is going to be 121. Oops, 121.80.
Nice chart of the day yesterday, Blake. Manifesting today.
Oh, thank you, Dale. Appreciate
Yeah.
that. Oh, you mean the dollar max?
Yeah.
It's trying, and we'll talk about that here in a second. It keeps popping its head towards the 20 really big resistance, and it just gets slammed back down again because it is big resistance. And I think you're gonna have to see some risk off in order to really see that move. But thanks. I think that it's building. Okay. Support for the euro. At this point, I'm gonna have to assume that any dip, well, probably back to the 120.80, but I'll write down two levels. And let me see, did I write down both those levels yesterday? I did. 120.50 and 120.80. I was going to write down the exact same thing today. So I think that's all where support is at, 120.50, 120.80. Okay. Okay. let's go to here's the cable. Okay, let's talk about that. So again, the dips below the 133 level are finding bids. Again, I'm trying to trade this differently through some crosses versus trading the sterling. But I mean, if you extrapolate out what we're doing, you know, it's probably just probably just building some sort of consolidation before we get a big breakout, whether it's, you know, bullish or bearish. You know, we'll soon find out. However, I still think that you have to be really cautious as you're getting closer to 135, and really probably as you're close to 132.50, because if you take a look at what the lows are overnight is 132.45. You know, as you get closer to the, you know, 133, you got it where we're at right now. You have to be really careful about being short. So I'm going to write down today 132.50 is being support. Resistance, well, whoops. Let me delete this. This is from yesterday. We don't need that.
Yeah.
Once that broke, it was bearish. So okay. So resistance today, I mean, I'm gonna mark it all the way up at 134 because hey, you know, we could get indications that some deal might happen and we could get right back up there again. So it'll be 134.25. And then you guys just have to be really careful with it. Okay. Aussie. So the Aussie is bunker strong. You know, iron ore was ripping last night, and that just took the Aussie up with it. Here, let me pull up iron ore here. You can see that. Let me go to the front month active contract here. You can see what iron ore is doing. And let me, this is just this is a 1 month. This will give you a good idea. Just right here. This is just this month over the last, you know, basically 30 days. That's what iron ore is doing. So if you're wondering why, and then if you look at like a year or 5 year of what iron ore is doing, there's a year, you know, we'll go over to max and see if we can pull up max data, but you can see why, you know, iron ore is just, it's dragging up the Aussie dollar at this time. So while we have this, you know, continuous rally in iron ore, you just got to be really careful about being on the short side of the Aussie, and it just keeps spiking right back up. So anyway, we just hit the 127% extension of this move. So I think what we have to, you know, look at from here regarding the Aussie, something that looks like this, but that doesn't mean we can't go higher. I'm just saying that you got to be, you know, more careful with it up here. I'd be a buyer down at, you know, probably the 74.50, and, you know, a seller up here at 75.20. 75, what is it? 75.24 is 161% extension of that last move. So 75.25, is that what it is? And then I'll actually even give us down to 74.30. And there's only one thing that's going to turn the Aussie lower near term, would be some risk aversion. And we're not immune to that. Don't think we aren't. Look at the equity markets. By the way, here's the daily chart of the S&P yesterday. That's an outside day. Well, yeah, it is an outside day. It's an outside day of bearish engulfing, really. Let me just double check that before I say that. I know it's an outside day. It's not, I don't think it's a bearish engulfing. Outside day still is a reversal candle. It's a fairly strong one too. So there's a good chance we could be going down today. And if we move down in the S&P and we start to sell off and get down towards like the 36, I'm going to write down this, the 36, 35 level, then you're probably going to see the Aussie dollar lose some of this luster right now. Again, is it, you know, is that it? Do you just write off the Aussie? No, you probably want to buy dips, but I'm just saying that it, you know, we start to see a sell off in equities and you're probably going to get the Aussie dollar that's going to pull back a little bit. So that's why you have to be careful chasing it at higher prices. I would just be buying Aussie on dips rather than, you know, rather than shorting it right now. Resistance for the S&P, we're just going to write down 37.15 because that was a high yesterday. Still bullish, but it still looks like the S&P, it does look like the S&P can pull back a little bit. Okay, here's the Kiwi. So the Kiwi holding 70 cents. Now, one of the things that's keeping the Kiwi trading heavy right now, if you guys don't know this, one of the things that's keeping it really heavy is that the Aussie New Zealand is ripping. The Aussie New Zealand is, you know, we have this inverted head and shoulder pattern. If you guys aren't seeing it, if you use ForexAnalytix, you already know. We're at the 618, so the Kiwi is probably going to be better supported than the Aussie today. But I'm just saying that, you know, we break through this support at 70 cents, and it's, you know, probably over for the Kiwi near term. So 70 cents, I think that's going to be important for bulls to hold. 71.05 is resistance. It is still bullish, but we can turn near term bearish or, you know, set up for a counter trend move. We can. Dollar Canadian. Dollar Canadian's really heavy. However, I've got a bid down here. So just so you know, I'm looking for the move to 127.33 today. It is bearish. And we're bearish while we're below, you know, we couldn't break this resistance yesterday, 28.33. This is just like the Aussie. You'll see it 28.40, I remember. You'll see it reverse probably if stocks reverse, you know. Hold on really quick. I'm going to hold on. I want to trade my if I want to trade myself out of this right now. Shoot. I was gonna take an offer on the euro sterling a little lower, but that's all right. But I'm sitting here with you guys. So here's the dollar mex. All I have to say is resistance at 20. If we break that, just be careful. If you're short, it's really big. 1970, and this one is it's bearish for now. Wait, that's 1970. It's bearish for now, but we can flip to bullish today. Really, if we see a move above 20, it'll flip immediately to bullish. So just, you know, keep that in mind. Dollar Swiss. I'm trying to wrap this up before the ECB. So 88.70. And then we have 88 cents, right? Resistance 89.50, then 89. I'm sorry, it's 90 or I want to be specific, and it is bearish. Dollar yen. Same crap, different day, right? We are trying to come out of this triangle, but I don't. Whoa, what was that? Oh, okay. All right. See where I just got filled on that. Okay. All right. Bought some euro sterling or euro New Zealand on that dip. Okay. So 104.75, 103.65, same thing. And it's a range. I hear somebody sniffling. Hey, Dale, you back?
Yeah.
Is it raining over there? Because it is, we're starting to
yet.
get some rain here.
No, not yet.
Oh, we got some.
Could use some.
Yeah.
Maybe it'll wash all the COVID from the sky.
Yeah, there we go. Maybe. So dollar index still heavy. I mean, you could probably look at this just like the euro inversely is just,
Yeah.
you know, we're bear flagging it, right?
Yeah.
Where I'd get concerned about this 91.50, if we got above 91.50 in the dollar index and you're bearish, I would be a little bit concerned. Because it should, I mean, it should, you know, stay bearish, or we should continue lower.
You have any fib extension levels underneath the recent lows?
Yes. It's the
Okay.
161% extension of this move comes in at 89.88.
Okay. That's where
So
we're
this-
going probably.
Yeah, that's probably where we're going. Eventually, yeah.
Yeah.
You know, look, if you're a dollar bearer, you're probably, this is the day you probably want to be buying the euro dip. You know, this is it.
Yeah.
You know, if you know, Lagarde says something and gives you an opportunity to sell it cheaper, then you know you do that, or buy it cheaper. Excuse me, I'm sorry.
Yeah.
U.S. dollar, Norwegian krona. It's really the same thing. 863. It's bearish, right? Still. 896. I mean, and that's if you can get if you can even get a move up there. I mean, we spiked up yesterday to this 885. Today we could spike back to like 890, 892, you know. So but we'll see. You know, we'll see about that. Whoa, gold. So gold. I have to assume that anybody who's bullish gold is probably a little bummed out about it. That would be my that would be that would be my assumption, because you know, the break back above 850 probably got some people bullish, thinking that, you know, hey, this is it, we're going to get this, you know, we're going to get this rally, and then it just, and it failed. So I think we have to be a little careful if we get below this 1820 level. Oops. And then resistance is going to be, you know, 1875 now. So, and I'm not touching it. All right, guys and gals, this is your bias chart. It is finished. So I'm done with that. Steve, Stelios, Dale, good morning, gentlemen.
Good
morning.
morning again. And I still
Good morning again. So anyway, let's see.
Yeah, so we have Lagarde speaking shortly.
Right now, right?
Yep.
So who knows what she's going to say, but I think you guys need it. And we also had CPI. Was it CPI? It just came out.
Let me check.
It was CPI that just came
Yes, 0.1 better than expected, whatever, yeah. And jobless claims, oh, that's higher. See, jobless claims last week was stronger than expected. So the question was, do we continue that trend? Clearly not. It's gone back up by 100 and something K.
Needless to say, Stelio, that in any case, we're still like quadruple times, I mean, higher than what was quote unquote normal, right?
True.
You mean pre-COVID, Steve?
Yeah.
Yeah.
Okay. Because, you know, I mean, when you look at the numbers, it looks like we've recovered so many jobs from, you know, we were almost at what, 20% at one, at the, you know,
Yeah,
valley of it.
that's not taking into account the usual
People that gave up.
plans, yes, of the participation rate.
Yeah.
Which, with the current trends, I'm assuming that within a year, it's actually going to hit levels below 60%, which I don't think we ever had before. So, you know, that makes you think, right?
Yeah.
Yes.
All right. Well,
okay.
Well, guys, I'm going to pass it over to you. Good luck today. For those of you, let me talk about a couple things really quick. First of all, if you want to be part of the ForexAnalytix community, please try us out. It's only $1 for 10 days. You come sit in our chat room with us, get all the analysis. And you know, heck, I was in the chat room yesterday evening, in between soccer practices. I mean, so it seems like I spend a lot of time there, and so does Stelios and Amanda and Polly and Steve. And so,
you mean
you're
in the
gonna
soccer
catch a lot of our
practice?
team in there. What's that?
You mean a lot of time in the soccer practice?
Yeah, that too.
What
But
position do you
also,
play,
if
Blake?
you want to try to get ForexAnalytix for free for a while, open a Pepperstone account. But you have to click this link here where it says open an account, because this way you can, once you get a live trading account with them, you can possibly get ForexAnalytix for up to 4 months for free based on how much trading you do. So there you go.
Good hunting today, Blake.
Thanks, guys.
Thank you, mate.
Have a great one. I will, and oh, just two last things. I'm sorry. So Amir Dullah Shah, he's going to be our guest on Friday. You guys can't miss that. He's part of our community. I've known him for 15 years, maybe. He's such a great guy. I know I've talked a lot about him, so I'm just going to leave it at be here on Friday for that. Also, the team, we're putting together 2021 forecasts for the market. So be on the lookout for a blog with all of our forecasts going into this next year. So, all right.
Perfect.
Cool, Blake.
Thank you.
Thanks,
Thank you,
guys.
Blake.
Thank you, mate.
Okay.
So,
ECB.
Stel,
Yeah, ECB, like Blake said, they extended PPP through March 22. That's 3 months more than was expected. They increased 500 billion in line with expectations, and extended TLTROs
yeah,
further.
TLTROs,
yeah.
yes.
And so roughly what was expected. The question is now, what is Lagarde going to give us in the Q&A?
I still remember.
She just said the inflation remains very low. You just remember what?
I still remember, Stelio, I don't know, sometimes, memory plays tricks with you. I mean, you remember things that, they don't matter that much, but I still remember the place I was when I read the first article about the upcoming TLTROs, and I can guarantee you I haven't been there in many, many years. So it's, it was another temporary
Oh my gosh, yeah.
thing, that they would unleash.
Temporarily permanent, bro. Yeah.
Yeah, exactly. Yeah. Which, stayed with us, and something tells me that it's going to stay with us for who knows how long.
Yeah. Anyway, everything is temporary. Like we say in Greece, there's nothing more permanent than the temporary. There you go.
Very true.
It is true. It is true. So
you philosopher.
ECB, not quite. Yeah. ECB, we're waiting to see what we're going to get. UK, we had the famous candle dinner between Bojo and von der Leyen. Nothing came out of it. So the market's kind of thinking, okay, one more day gone, and we've got nothing.
And no progress.
So the pound, yes, the pound is under pressure. But again, Boris Johnson said, I think, if I recall exactly how he said we're willing to try and see any avenues that will give us a deal. We're willing to explore them, or something like that. So that was kind of positive. But again, we've heard so many of these over the years that really, frankly, I really don't care anymore. I just want to see something firm, written, signed or not, and then I will decide what I'm going to do. I still think, for the record, I agree with Blake. I still think in the end they're going to botch something and put something through, which is going to be crappy for sure. But anyway, they're going to take the uncertainty away. So that on the UK side. US side, we've got nothing new, although they've agreed on the package in terms of a top line number to both sides. I don't think they're still discussing, or haven't actually discussed the details yet. So there as well, timing's running out. So they have to do something. It's like everywhere in the world, politicians are just twiddling their thumbs and trying to do, I don't know what they're doing. But anyway, nothing there on that front either. We did get some data. Yes, we talked about them briefly. Nothing worth mentioning. UK actually had some good numbers: manufacturing production, industrial production. I know they don't matter as much these days, but it was a big beat. Like month-on-month, manufacturing production was expected 0.3%. It came in at plus 1.7. So it's it's a big beat on that. And initially the pound kind of liked it, but then the prevailing feeling today.
Yeah, was that it doesn't really matter because other things are at focus at the moment.
Correct. Data-wise, the last thing, Norway inflation for people who trade, that came in lower than expected. So it had been surprising to the upside, and now it came in lower than expected. So we did get some quite good numbers out of Norway over the past few months. This is the first disappointment, and for people who trade the krona, that's definitely worth watching. For people who have been following me, I'm still very, very bullish the krona, but I think we will get a pullback first. That's why I have now, for the first time in years, I think, have no krona position. I have very, very few positions at all, actually. So I'm just waiting, because I think we're on the cusp of something. I don't know what it's going to be, but going into year end and beginning of next year, I think we're going to see some fireworks. Elsewhere, risk is subdued. Metals started lower on the day overnight, but now they're going positive. So nothing major there either. So really, the big mover in FX has been the pound, and the euro also rallying a little bit, but really it's only been about the pound.
Euro remains very well bid, right?
Yes.
And so far, and it's extremely early, I have to admit, but it's another indication. Look at the dollar index, Stelio, how heavy it is, despite the nice daily reversal we got yesterday in indices. Blake mentioned it. We had an outside black candle in the S&P. That's a nice reversal candlestick. We had the same thing in the NASDAQ, more prominent though, because yesterday's price action actually engulfed the prior 5 days. So in a single day. So, something that was missing. We knew that we already had some RSI divergence. We were talking about it. But as I was saying, we need some type of a signal, which we didn't have. So yesterday we got a signal. Now, do I believe that this is the signal that you should be selling everything you have and going short with full leverage, etc.? No, I don't. But I do think that after a period of momentum loss, after, of course, a huge run higher, this is, as I was saying, pre-reversal, this is not the place to be buying for sure. And, might even be the place you can sell if you have a short term horizon. Yeah, because, if you're asking me if I think you should be selling here because this is the high, the answer is absolutely no. I don't think that. Now, can we move somewhat lower for a period of days, even, a couple of weeks? Yeah, it can happen. And so far we have a couple of nice signals. Yesterday's candlestick is one. and the VIX divergence is another one, and obviously fundamentals are on your side, but that hasn't mattered for 12 years. So take that the least to say with a pinch of salt. So yeah, you might be able to make some money in the short term being short this market, right? The risk reward ratio is still definitely extremely appealing because we're just a few handles of the highs, especially if we're talking about the S&P, while even a move back to retest the broken triangle is a rather substantial move to the downside for today's standards. I mean, we're talking about like 5% for this market to the downside is not bad. Unfortunately, that's how it's become now. So
Steve, how do you reconcile, the dollar being pretty weak and the precious metals getting hammered?
That's how this conversation began. So the first thing I wanted to indicate here, Dale, is that we've already talked about the fact that it is extremely likely that the dollar will remain as an underperformer even when the indices will not be doing well. I'm not, I don't mean that the indices are going to be plunging and the dollar is going to be plunging as well. Not that it's impossible, but it's a rather improbable scenario. But I do think that the dollar is going to be selling off during risk-on periods a lot more than it's going to be recovering during risk-off periods, because in general, I
agree.
Yeah, the dollar has multiple serious reasons to be headed lower overall, right? And that hasn't changed. Even my cat agrees. If you heard her.
Yeah. Good trader.
Yeah, she is actually. She's learned a few things, over the years. Yeah, by
let her scratch her screen.
By harassing me, while at my computer.
Yes.
Yeah.
By the way, Lagarde just said again, we will monitor the FX rate. She actually used the words rate hike.
Here she is, by the way, if you want to meet her.
Oh, Lagarde. Oh. Aliki, right? Yeah.
Yeah.
So Lagarde did mention about hiking rates eventually or something like that, which I think is pretty funny to be hearing at this point. But yeah, we got the first mention of observing interest rates. So this is the first step. And as we get closer to, like, I don't know, like Blake said, 125, I think they're going to start worrying about up there. So I'm watching the comments, see if anything. She just said also the second wave is to result in a significant Q4 contraction. Well, that's economics 101, so we kind of expect that.
Totally. I mean, you don't really need university education for that, right?
Yeah. I'm going to be keeping an eye on the statements and the comments to make sure we don't miss anything. But other than that, it's been pretty quiet. Metals recovering, oil recovering after a few negative days. Nothing else worth mentioning, I think.
Yeah, speaking of oil, 1.2% higher today. And I mean, if you zoom out and you look at the picture here, I mean, we had already been saying that the previous days looked like another, consolidation. I mean, crude seems, remains actually extremely well bid, and it's really not easy to fight that, right? At some point it will have to correct lower as well, but really, why fight this? And here's natural gas that is trying to, in essence, trying to consolidate its prior losses. Admittedly, the more it takes here without rebounding, the higher the probability that it has a little bit lower to go. And where is lower is where we indicated, I mean, towards, that confluence of supports before we move to the upside, right? That's what I think about crude oil and natural gas. In essence, nothing has really changed for me to, to go much into detail about it.
Steve, just a quick note about Dcb Forecast for GDP. They've done some tweaking. So for 2020, for people who follow this, for 2020, they've moved it to minus 7.3% from minus 8. 2021, they moved it lower from 5% to 3.9, but 2022, they moved it higher to 4.2% from 3.2. I mean, how can you estimate 2 years or 1 year ahead? I don't know, but especially with what's happening. Anyway.
I mean, I really find it funny that they even try to do that, really. It's like, I don't know, mate.
I guess they have to, right? They have to probably. You know, it's something they have to do. But anyway, that's what they're saying. Do whatever you want with it.
Yeah, I know exactly what to do with it. I don't know if they do. So
also, she said the risks tilted to the downside, but have become less pronounced. So, yeah.
Yes, less pronounced if she means in comparison to March. Yeah, I assume she's right about that, but you know, that doesn't say much either. Speaking of things other than FX, just look at copper. Copper was negative on the day at some point. Look at the candlestick we have on the daily as we speak. I mean, you know, this thing is unstoppable. I do think that we're headed higher. As I said, 369 actually the next upside target, the 127% extension of probably the last bearish leg we had in copper, and we're going to have in a long time, if you ask me. So yeah, I mean, if you get the opportunity to at some point to get a retest of this breakout area at 320 something, probably you should be buying it. Palladium not doing much. Platinum, you know, recovering today and inside day so far. Gold and silver, you know, in the grand scheme of things, a negative day yesterday, yes, no question about it. But has something really changed? No, nothing has really changed. I still think there is a very decent chance we've seen the low. Not certain, but a decent chance. And of course, how are we going to know? By breaking through this large channel. You know, you can see the formation is very, very equivalent between gold and silver. Of course, you know, it would be most of the cases it is. So, you know, I think we're headed higher, and I think we have every reason to do so. Nothing to add here. Nickel, just look at nickel also. I mean, it's like a beach ball trying to hold it underwater, right? Attacking the ascending channel once again. We're getting very, very, very close to the 2019 high as well. I think it's a matter of time for us to break through it. Yeah, admittedly, this is not the place you should be buying. I mean, you know, you don't need to be like a guru or an expert to realize that, you know, after such a huge move higher and now testing resistance almost, you know, near 1 year high, yes, this is not the place you should be buying. But I do think that nickel, in any case, is going to continue higher over time. You know, any good dips will probably end up being buying opportunities. Bitcoin, Ethereum still correcting / consolidating their prior gains. 490 in Ethereum, a nice level to be considering to be buyers. 16,500 is the equivalent level for Bitcoin. I don't think there's much more to be said here. Let me go through some of your questions, and then I'm going to have a look at some of the crosses, by the way. In somebody's asking about, let me see. Somebody's mentioning the USD Swiss and the pound yen. Let's have a look at both of them. So first of all, here's the pound yen. It looks very similar, you know, in the short term to the pound, right? Now, the big difference here is that we're still within this long-term descending channel, right? But the similarity is in the recent price actions that we got rejected from the most recent ascending channel. So, you know, clearly against 140.50, the risk reward favors the downside. If and when at some point we see a break above 143, I think that's going to be a very bullish development, but we're not there yet. For the time being, as I said, if you really want to do something in the short term, I think the risk reward is only in favor for you to be short if that's what you want to be doing with it. Now, having to do with the USD.
Steve, just one note.
Interrupt me as many times as you want when she says something.
Said that the euro exchange rate is going to start to weigh on inflation. So this is the second time she's mentioning it, and clearly, it's you know, we all know that above 120, it's where they start, where the ECB start getting a little bit nervous.
Yes,
so,
I thought she'd start talking about euro strength. So maybe this is going to set the stage for, not a new bull market in the dollar or a new bear market in euro, but I still think there's a chance over the coming months, the feeling you have, Stel, that it's going to be fireworks, that we'll be able to buy the euro around 114, 115 sometime in the first quarter. And then it really blasts off.
Yes, you can't exclude anything.
Yeah, guys, I'm a little bit skeptical because, out of curiosity, let me play the devil's advocate, as you like to say.
You're like Phil Donahue.
Yeah, so let me ask you something out of curiosity. And what exactly is the ECB going to do about it? What are they going to do? QE? They're doing as much as they can, not as much as they can. Not exactly. I mean, they still are of the belief that there is no limit, but they're going to find out there is. In any case, what are they going to be doing about it? Intervening directly in the currency market, in the most liquid currency pair on the planet? I don't think that's going to be working very nicely. So
you are right, but what they can do is show that it's something that they're looking to tackle. And you know how psychology works, right? In the markets, when you know that somebody's going to be out there.
I'm not saying it's going to be useless, Stelio, but on the other hand, I'm thinking out loud again.
Have a temporary effect.
We have the vast majority. We have the vast majority of the European economies that actually consist the core of the eurozone. Because yes, there is Greece, there is Portugal, and a couple more, but they're a tiny fraction of the European economy, having to do with the stronger countries, right? Their finances, with the exception of Italy, are, so magnificently better than those of the US that, I'm not sure that whatever they say can actually, other than temporarily, affect the downfall of the dollar. My point of view, at least, you know what I mean?
I agree. And, we've been saying this for a while, for months now, that I think the dollar is going lower eventually. I just think there might be a spike or something like that in the meantime. But yeah, I mean, we've said this months. I think the dollar is going lower. That's for sure.
Yeah, why can't we rally from 90 back to 95 and then go to 80 and 70 and 60?
Yeah, Grigoris mentioned certainly helicopter money would shake the euro, but not in your dreams. And I agree. This is another point to consider, which is the following: between the two economies, the eurozone economy and the US economy, which of the two you think has a much easier path towards helicopter money? Clearly the US. I mean, in essence, they've already been doing it, right? While in Europe, especially Germany, no.
No direct payments in Germany. In the UK, yes, but nowhere else in Europe.
I mean, Germany is not going to agree to that. You know what I mean?
Yeah.
And
they remember
even if we assume that they're going to agree to that, it's going to be at such a lower extent as in the US, which is another, element that plays a role. Because, we've been talking, and Blake made a mention yesterday on that, having to do with what creates inflation and what kind of monetary policy is inflationary. And we had, a little bit of a conversation on that. And, we explained that the first rounds of quantitative easing were not really inflationary at the level of consumer goods. They were inflationary in an indirect way. So inflation was spilling over to things like rent prices and things like that, because they were assets that ended up benefiting from the type of inflation that quantitative easing is. But now that we've started shifting to another type of stimulus, which is from the bottom up, this is clearly going to be inflationary on consumer goods as well. So my assumption is that as long as Germany has the first saying, and it's going to continue to have in the Eurozone, there's not going to be any real helicopter money, or if it is, it's going to be at a fraction of what happens in the US, which also means that the chances and the extent that the European inflation is going to recover in comparison to what's going to happen with inflation in the US is also going to be, it's also going to differ quite a lot. And as we know, inflation is definitely something that erodes the currency. And since we know that the Fed is not willing to do something about inflation, even when they have clear evidence that it's going to happen, since they're not going to be countering that by raising interest rates, at least not until it's late or too late. That's another reason why I expect that the US dollar is going to, in the medium to long term, underperform the euro. As I said, a lot of arguments can be made about the solidity of the European economy, the Eurozone. But, looking at the other side of the Atlantic, I don't see anything better. I only see worse thing. I mean, taking away the probability of Italy imploding, which there is a chance, anything else I think is going to end up being, more or less Euro USD positive in the medium to long term. Anyhow, will demand to repay international loans denominated in US dollars lead to stalling of USD fall? Listen, the fact, first of all, the US dollar is benefiting in multiple ways from being the world's reserve currency. If it wasn't, the dollar would have been decimated already. So all of these reasons, one of which you mentioned, play a role in making the dollar resilient. But by resilient, I mean, it should be falling by a lot more. It's falling slower. And I think that, any of those forces will act as a headwind to dollar's depreciation, but it's not a headwind enough anymore to stop the dollar from depreciating. Yeah, there are going to be periods that the dollar is going to be rebounding. Nothing moves in a straight line, right? But the path of least resistance clearly remains lower. I've been saying that for years with Stelios, and I think that the signs that we will be vindicated are already there. And I think that if we have this conversation in a couple of years from now, there is going to be an even much higher chance that we'll be in the right side of this, right, Harry? Δεν μπορώ να μου. No, yeah, he sat on my mouse.
Well, of course, what else do cats do? They love mice.
Yeah, give me a second, because now he...
Anas, are you in the house?
So, what do we do? Do we have more time, or will you have your guest here?
Yeah, I'm just checking. I don't think he's here yet. Go ahead, buddy.
Okay, no problem. So let me check some of the questions then. Will failure of deal with Britain lead to a reversal of the dollar fall? Very, very temporarily, yes. The pound is part of the DXY. So if you're talking about the DXY, yes, I mean, temporarily it's going to give a boost to the DXY, right? But I think that the effect is going to be really temporary. It's going to last like what? A few days, a couple of weeks at best. I wouldn't expect anything more than that, to be frank with you. So, whatever effect it will have, it's going to be very short term. Because we're not talking about the euro here. I mean, the pound is... Stelio, what is the pound in the DXY? What is it like? 20%? What is it?
Let
15%.
me check. Hold on. Let me check. DSI, there we go. And the pound, 65 on the DSI.
No. The DXY.
Oh, sorry, on the DXY.
What percentage of the DXY basket is the pound?
Well, the euro
15%.
is probably around 50, just over 50. So it's...
Euro is 58%.
50, yeah. Okay. Hold on.
Risk off, NG.
Yeah. As I was saying before, I think in the short term, the risks are tilted to the downside.
11.9, 12%. 12%.
Yeah, 12%. Okay. Yeah. So, I mean, the effect is not going to be that big. By the way, look at the DAX. This is a nice short-term chart here. DAX is breaking through this, kind of an ascending wedge, because the lines are not parallel. So I think the DAX is opening the door for, somewhat of a move lower, at least like back towards 12,840, I would say. Here's in the S&P. This is, by the way, now the 4-hour chart, right? So here's the S&P. Somebody can also see potentially an ascending wedge here, which we're just breaking through, right? There it is, right? So short-term risk reward looks appealing for some type of a correction. I mean, it was long overdue. As I said before, do I think that this is going to be something, dramatic, something like that extends over time? I don't think so. Here's the Nasdaq breaking through this channel as we speak. So as you see, all the indices are more or less, as we speak, breaking through some short-term formation that points to some upcoming weakness, right? So there you go. Keep that in mind.
Yeah, you really only know if a top or a bottom is significant until you have a rearview mirror.
Yes, that is a very valid argument, Dale. But we also know that statistically speaking, treating counter trend moves in prolonged trends as exactly that, counter trend moves, is the smart way to go, because trying to fade the trend every time you have a little bit of a reversal is sending people to the poorhouse, right?
Yeah.
So you should have your expectations decreased to the minimum when we're
I've
talking
lived
about
there
kind of
before.
to the poorhouse.
Yeah, I had a room. I had a room there once.
Oh, by the way, somebody mentioned
Rent
they
was
use the
too
Swiss.
high, so I moved.
No, you're true. Somebody mentioned the USD Swiss before, and Stelios had some Lagarde news, and that's why we interrupted that. So listen, USD Swiss breaking through this formation, which was anyhow very bearish. I mean, look at this consolidation. It was, clearly not a bullish reversal type of thing. So, next downside target 88.15. After that we have like, what's this? 87. Then like 85. It looks really bad. Really, it looks really bad. This chart looks really, really heavy. Anyhow, below 90 cents, having anything than a bearish bias is, seems very foolish to me, if you're asking me.
Okay, our guest is here now, Steve.
Okay, good. Enjoy.
All right, it was nice seeing you in your office and your pets. And what do you have on your T-shirt? What's it say there? Oh, Coca-Cola. All right.
There you go.
All right. You owe me a Coke, man. Jinx, you owe me a Coke.
Okay.
All right. Thank you, partner.
Where's the beard? I actually saved it off like today.
Oh, yeah. Okay. You look younger.
Yeah, makes sense, right?
Yeah.
First of all, because most of my beard is white now, so that immediately adds some years.
I know what that's like. I call it silver, though. And during this, one of the silver things I really like is my hair. All right. All right, buddy. Anas, I'm going to get you set up. Looking forward to your take on what's happening here in the oil sector. I thought I did. There you are.
There he is.
Yeah. Welcome back, Anas.
You need to unmute yourself.
All right. Do you hear me now?
Yeah.
Good morning.
Loud and clear.
Yeah, you're like that commercial, Verizon, I think. Can you hear me now? We got you, buddy. You want to share your screen, green box?
Well, not now.
No,
probably when
not
we
today?
get to the discussion. No, there will be a couple of slides, but probably during the discussion. Let me do it now because
you may as well do it now.
And let's do this. All right, share screen, and do you see it now?
Yeah, got it. The Economist magazines,
yes.
Drowning in oil, the end of oil, everything about oil. All right, can I start off with just getting your assessment of what you think?
Let me guess, all of them contrarian indicator front pages.
Sure.
Yeah.
Yes, as always, when the media catches on something, it's already too late.
Absolutely. The first thing is, when looking at the oil market, we still have a major surplus. If you look at U.S. inventories, for example, we still
Yes.
have about 80 to 100 million barrels that need to be removed from the storage to get a balanced market. If you look at worldwide, what's going on, we still have a surplus. If you look at OPEC, spare capacity is very high. So there is a lot of pressure preventing oil prices from going up. The recent increase in prices, especially in the last 2 days, is mostly attributed to some geopolitical events.
That's what I was going to ask you
Yes.
at the opening.
So
Okay, go ahead.
here is the issue. It has been predicted months ago that if Biden wins, he is going to be tested, and he is going to be tested by friends and allies, and enemies alike. So everyone is going to try to test him, whether Europeans, the Israelis, the Saudis, the Iranians, the Iraqis, the ISIS, terrorists, etc. Everyone is going to try to test Biden, and we are already seeing this in the market today. If you look at what's going on in Iraq and all the attacks on the oil facilities, etc., the attacks on Americans in Iraq, you look at the Saudi Emirati actions, for example, what happened at OPEC meeting, the Iranians, the Venezuelans, supposedly the increase in exports. I think that increase in exports is just ghost ships appearing. That's just part of the test to Biden. So
Okay.
the idea here is we have the surplus in the market. At the same time, we have those tests
Right.
that are supporting prices, and that's what we see in the market today.
Okay. Well, I want to ask you, no one knows, unless you're Nostradamus, but I'm curious with, you having covered this space for decades, what do you think is going to be the tests that the Iranians give Biden after the assassination of the nuclear physicist and around the 1-year anniversary of the assassination of one of their military leaders? I forgot the name of the general. But this recent assassination, I mean, they actually put in museums all the cars that have been blown up of nuclear physicists. It's the most dangerous job in the world to work on nuclear fission for Iran, isn't it?
Yes. So it's not only Iran, by the way. There are even students throughout the Middle East who were studying this in the US and Europe and being killed. I don't want to delve into the politics of these things, but there is one fact that the media missed was this guy is completely irrelevant to the Iranian nuclear program.
That's interesting. The media has represented that now this is going to, be such a setback for Iran on their program.
No, because whatever his expertise is basically was needed at the beginning of the program. Once they passed that stage, his expertise was no longer needed in this case. So he is not crucial to the Iranian program in this case. But since we are talking about politics, I just want to mention one statement, and I try to avoid talking about politics in public. If you look at the other Gulf countries, if you look at Saudi Arabia, Emirates, Kuwait, etc., what they hate the most are those small attacks, because those small attacks basically are going to lead to retaliation by the Iranians against them, and they have nothing to do with it.
Yeah.
What they want basically is a complete solution to the crisis. They don't want just attack here or here or here. So they are not going to support assassination. They are not going to support small attacks on nuclear facilities, because they are first in line to be hit for nothing.
Right.
And that will continue. So they are against all of these attacks. What they wanted basically is they want a complete solution to the issue.
Is a big hot war a solution they have on the table?
There is a lot of hype going on with kind of all articles basically pointing out there is something cooking. My view is when there is something cooking in one area, we should look to the other side. We've seen it before.
Yeah, in fact, I want to acknowledge it during this interview in us that a year ago, when everyone was worried about big retaliation from Iran, you said there would not be a war. They launched some missiles at an American base in Iraq, but it certainly did not escalate. And you brought calm to your listeners and people that read your stuff, because it's always good to know from someone like yourself that we don't have to prepare for something like that. And you said it would not escalate into war at that time. So, you know, I respect your
that
work.
lead us to another issue. Again, we are talking about politics, and I don't want to talk about
I know
politics.
you don't.
That all this hype about a resolution to the Qatari, Saudi, Emirati, Bahraini conflict. There was a lot of hype in the last couple of weeks on this, and really, we did not see any results to that yet. Kushner went there to discuss issues related to Qatar Airlines and the airspace. We have no resolution yet on this, but it seems while the media focus on the amount of money that Qatar pays Iran, it's peanuts to the Saudis.
Right.
The Saudis are not going to yield just because of $100 million or less. This is peanuts. This is nothing. What the issue here is, there is a fear that some rogue elements within the Iranian regime is going to attack an airliner with a lot of Americans on it, and then the U.S. president has to respond.
Yeah. Okay. All right. Why don't we switch gears from politics to economics?
Sure.
So the dollar has been under a lot of pressure. It's lost 10, 12, 14%, depending upon the currency that you compare it against. And, you know, the petro currency has been a big advantage for the U.S. Is that going to be challenged in the Biden administration? Because the Trump administration had very close ties with Saudi Arabia, and Biden most likely will be different in many ways. Could there be in the years ahead the death of the petro currency because the Saudis would rather have euros or yuan?
No, for several reasons. First, the Saudis have worked with every administration for the last 70 years, regardless of which party was in the White House. So, and in fact, one of the darlings, one of the best speakers that the Gulf nations get is Bill Clinton. They always get him there to speak. So the idea that they are going to have serious problem with Biden may not be correct. And let me make this statement that deep state to deep state, both of them are fine.
Okay.
We have personalities, but deep state to deep state, they are working fine. But let's go back to the petrodollars. Let me explain to the listeners a couple of points here. The short, I know some people may not agree with me on this, but there is no theory to support the short run negative correlation between the dollar and oil prices. This is kind of a made up correlation that traders started acting on it. And once they started acting on it, it happened. And those young traders who are coming,
prophecy type of thing.
Absolutely.
Yeah.
And those young traders who are coming online now, they believe in it and they go and and so we have kind of a rotation. Once they get older and they realize it's not really happening, they leave it. And then other young traders come and they do it again. The reason why, because if you go before 2008, we did not have that much talk about, I mean, both you and I have gray hair, so we remember this. We did not talk about it much before 2008. All of this happened after the financial crisis of 2008, 2009. And the reason why, because when everything collapsed at that time and the real estate collapsed, only commodities left to invest in. And that's where this was created. And after it ended, people thought that was the conventional wisdom. No, it's not the conventional wisdom, and there is no theory to explain it. So in the short run, basically, there is nothing but certain circumstances might lead to it sometimes, and people believed it. But in the long run, the theory is very clear. Higher dollar reduces demand and increases supply. Lower dollar increases demand and decreases supply. And therefore, we have this negative correlation in the medium and long term, and it's supported by theory. And the reason why, I know we don't have enough time to talk about all the details, but think about it this way. If oil prices, if the dollar goes up, but oil prices remains at $45, then for the Chinese and Europeans and others, oil is more expensive by exactly the same appreciation between their currency and the dollar. So if the dollar goes up by 10%, oil prices in those countries will go up by 10%, although the international price is the same.
Wow.
And if the margin is large enough, that affects the quantity demanded, and we see a decline in demand, and therefore we have a reversal or inverse relationship here.
Okay. All right. Well, here we are wrapping up a year. What a year, huh, Nas? And looking into 2021, I'm sure that you probably have your radar on for what you think may be significant developments in the oil market next year. You want to talk about a couple that you're paying attention to for 2021?
Yes. Generally speaking, it is very clear we have to divide the year into two halves, the first half and second half, because the circumstances are different. And the fact that we are starting vaccination right now, the impact of vaccination on the larger population is going to appear in the second half. OPEC behavior and OPEC plus behavior is going to change. Demand basically is going to pick up usually in the summer anyway, but now we have kind of recovery, so we might end up with kind of a sharp increase in demand in the second half. So generally speaking, we are talking about improvement in market balances in the second half. Here is the problem. The problem is we need to wait until the end of the month, at the end of January, basically, to find out what is the status of the agreement of OPEC Plus and who increased production and who is increasing it substantially. But here, I would like to remind the readers that we had a serious problem, especially with the media, not only with the media, even in specialized newsletters in energy that's been sent to clients about the rift among OPEC members, and especially between Saudi Arabia and the United Arab Emirates. You guys and everyone else heard so many stories before the meeting and during the meeting about a rift, and this meeting is going to be difficult, and things are basically going to collapse. The surprise was they reached an agreement, and it was fine. And all those predictions about the collapse of the agreement, et cetera, and all the rift. Where is the rift? Where is it? But what people do not know, and this could be shocking to some, I already wrote this on Twitter, that someone hired a reputable public relation firm that is based in London to promote the story of a rift between Saudi Arabia and Emirates.
Okay. For what purpose?
I never seen something like this in my life. This is kind of very strange. And if we are going to go with that, then, well, it's, I think, legitimate to ask whether the whole meeting was a setup.
Mm-hmm.
And everything was a setup. And the delay was a setup. At the end, the Russians chaired the meeting. At the end, it was the Russian proposal that's been adopted. And the question is, why? And why would someone hire a public relation firm to promote the rift between the two countries? So the issue here is we have an agreement that they increase production by 500,000. Anyone who underestimates the ability of those guys to be flexible, they don't know anything about the market. Those guys proven time after time after time that they are extremely flexible. And here I would like to make a point, kind of an important point, which is, imagine if the Saudis did not cut production in April, and it was free market since March 6th, and free market for all. What would have happened? We would have
another collapse in oil prices.
Not only another collapse, we have a total collapse of the US oil industry. A total collapse. which is going to lead to a major crisis because it's going to lead to lower oil production and lower natural gas production. We are coming into a winter where natural gas is very essential. We would have the 1973, 1974 winter all over again, people talking about the freezing of America. So the
Okay.
point I'm making here is, yes, the oil market need to be managed at least at the extremes, and we do need Saudi Arabia, we do need OPEC plus. Those who are fighting against it, they don't know what they are wishing for.
And energy policies coming out of the Biden administration, I know they have plenty of dragons to deal with. Probably going to take some time to repair any damage between allies, etc. But do you think that there's more of a longer term issue for the markets, and Biden's not ending fracking, but capping some wells and putting people to work to cap wells during this time? Do you think he'll follow through on that?
Let me start with the point that for 2021, the year and the market balances for 2021 are already set in stone, regardless of what Biden does.
Okay.
Okay. The impact of Biden is going to appear 2022 and after, whatever policies they want to do.
Okay.
The problem we are having right now is how much money they are willing to spend and print to do these things. And if they do it, which states basically is going to get the money, and whether that's going to be viewed as subsidies to the oil industry, and the oil industry reputation is already being tarnished. So do we need more of that reputation by giving them subsidies and doing things that they should have done? So I am worried about any efforts to subsidize the oil industry in the United States because of these issues.
Okay. Well, Nas, what do you want to wrap it with going into, December and COVID?
Couple of points. Okay. This slide, basically, it just shows where the predictions were and all that stuff, and we know all of them basically went wrong. Yeah. And for example, if you look at that sheiks versus shale, we know this is still kind of going, and we don't know what the result of it, and there is no proof either way. But about the end of oil and the peak oil demand, it's a complete nonsense to believe that the oil demand has already peaked. And I'm looking forward next year just to prove this point. The other thing is, let's remember this.
Yeah.
That's Al Gore. He was expecting that the polar ice cap might disappear in summer 2014. So the idea here is a lot of people are resorting to fear. They are making predictions. They are giving dates. It has been proven wrong. And the final one is about this peak oil demand. I'm just posting this for people to realize that, okay, we are going to have a lot of electric vehicles in Europe and the United States and Japan and most of OECD countries. But to say that we are going to have it global is a complete nonsense. Nigeria's population is about 200 million. Only 57% have access to electricity. Look at Pakistan. They have 212 million. Only 72% have access to electricity. In Sudan, they have 42 million, and only 60% have access to electricity. The priorities...
Therefore, EVs, not practical.
In those countries.
Yeah.
Okay, we will have widespread use of EVs in most of OECD countries, but to think about it in a global sense, it's not going to happen.
Okay. All right. So
that's it.
That's it. Interesting. And as always, Anas, I really appreciate your time, and it was a great time to have you with what's happening here. Why don't we wrap it with your best guess for the range of WTI in 2021?
This is very hard for me to say, and I would rather
give
not.
It a shot. Give it a shot.
I would rather not. I think the last time I told you we will not go below 37.
Yeah.
Something like this. That's for Brent. I believe we said it like this, and I think this is still the
floor. Okay.
Yes.
And upside potential?
There is upside potential, but not much because of all the issues and the spare capacity among OPEC and other factors.
Okay. All right, everyone. If you want you know, if you really want to get into the nuts and bolts and really the, you know, talk and follow an oil expert, here's your guy, Anas
Thank you.
Al-Haji, and it's his name on Twitter, at Anas Al-Haji. And you're going to get a perspective on the oil. One thing I really respect about Anas, he cuts through all the hype and gives you the story that's rational instead of the emotional story. So thank you very much, my trading warrior brother.
Thank you. Thank you.
Have a great end of the year.
You too.
Do it again, inshallah, my brother.
Inshallah, inshallah, inshallah.
All right.
Bye.
So that's a wrap for us, everyone. Have a great day. We'll see you tomorrow. Blake has a special interview. And remember, don't just count your barrels, count your blessings. And we'll see everyone tomorrow to wrap up the week. You're very welcome, everyone. Namaste. Shalom. I know them all. Adios.